All right, we're back. This is Against the GrainReal Estate TV. I am your host, Richard Chinniquay, where we will our revenue out of our real estate investment properties. We do not wait for the revenue. So today, this is our daily segment where I'm able to, I just want to touch on something that indirectly or directly relates or correlates with real estate or running a shared housing program, because that's what I do. I run a shared housing program out of my real estate investment properties, and by doing so, I'm able to maximize the amount of income I receive from these properties instead of waiting for either my properties to appreciate, for me to actually take some of that equity out of the property, or I'm getting the very minimum out of my property, which is the renting my property the traditional way, where I'm renting, my mortgage is $1,400, and the property, my mortgage is $1,400, and I'm renting that area is going for about $1,300, and I'm collecting that rent if I can get it from my renter. If I'm gonna, let's say I decide to Section 8 my property, that's a whole different story. So now, in this segment, it's called the Daily Grain. In the Daily Grain, we want to touch on anything that has indirectly or directly has to do with running a shared housing program, becoming a shared housing provider, or using your program to invest in real estate. So today is just a Daily Grain. We're just going to touch on maybe 3 to 5 minutes on certain topics that have to do with investing in real estate or running a shared housing program, period. Okay, so now, today's topic is using a shared housing program to reduce the holding costs of investment property. So, I've done this, and I've actually aided other investors in doing this. So, when you buy a investment property and you're using the investment property, let's say you're buying the property in order to flip, or you're buying the property to hold because you see potential comps or solid comps in the area, and let's say you're projecting these comps within a year to go up a certain amount, and you're going to use that to kind of gauge what time you're going to sell, how long you're going to hold the property. So, for instance, holding costs when you have a property where I don't know how you acquired it. Let's talk about the first way. So let's say the traditional way, you do a regular investment loan. So you're putting down, it's 20% for the down payment. Let's say the hypothetical situation, the down payment is around 40 grand. You put that down on the property, you're financing around 180, your purchase price, let's say, is like 215. 215, 20% of that is about 40 grand. So you put down 40 grand, 30 grand, and now, boom, this is a property that you want to actually hold. The property needs a little bit of work, or that the property looks like it's going to be worth a lot more in about 2 years, because you see that you're looking at the market, you see the trends that the values are going up. You're like, man, I can't afford a property right now. How am I going to actually hold this property so down the line, when the property does increase in value, that you can turn around and sell the property without coming out your pocket? So what I do is I run a shared housing program out the property. And also, what this does is this eliminates or reduces my holding costs substantially. So let's say I'm allocating maybe for that holding cost, is that mortgage is going to cost me $1,400 a month, right? Or let's say 11. Let's say I put down 44. So let's say the mortgage is around. Excuse me. Let's say the mortgage is around $1,000 a month. Okay. I know, running my shared housing program, a shared housing provider, that I can get $750 minimum for each room. So now, what I would do is, let's say this property has little minor upgrades I want to make on the property, and little things I want to do in order to raise the value, increase the value of the property quickly. So what I would do is I would advertise this as my new location for my shared housing program. I would put 2 people in the property, if not 3. So what I would do is I would put 2 people in the property, which would range around $750, $800 at the least. So let's say $800. I get $800 per person. Let's say I put 2 people in there. That's $1,600 already. Okay. Now $1,600 already is going to cover my holding costs. So now the holding cost is covered because you have those people in there. So now it's a 3-bedroom, right? Let's say you put the third person in there. So now you're at what? You're at 888. So you're at 16. You got 2,400. So Now you look at it, you're like, okay, well, I'm at $2,400 out of this property, and I know that it's costing me to hold this property $1,400 a month or $1,000 a month. So you're making well above what you want to, and on top of that, you're able to make the repairs or the upgrades or the So let's say you got some minor repairs you need to make in the property in order to bring the value to where it needs to be. You can work around these individuals. It allows you to work around these individuals and make the upgrades to your property, to those rooms, in order to bring the value of that property to where it needs to be. So let's say in 2 years you decide to sell it, or in a year you decide to sell it. Not only did you not come out of pocket for your holding costs, you can allocate that money in order to use it to make upgrades. You want to upgrade the bathrooms, you want to upgrade the kitchen, you want to upgrade the bedrooms. We're talking like paint, maybe some different molding. You want to go maybe with a higher molding, the 6-inch molding or whatnot. Or you want to go with you want to install maybe a ceiling fan or something that's going to bring value to the property in the bedrooms. But the main focus is the kitchen, bathroom. So the wet areas. The wet areas bring value to a house the fastest. So you can focus on that while renting your property through this program. So now you don't have to worry about, I got to pay for the mortgage, and then I got to come up with money in order to do the upgrades. And I have to worry about paying the property taxes. I got to worry about paying the water, sewage, and all that. Renting the property out will eliminate your holding costs and it will free up cash for you to use that cash in order to flip the property and actually you'll be able to make that money back once you sell the property within a year or 2 years or whatever your plan may be. But the main thing is the holding cost. The holding cost to hold this property is virtually eliminated, because you are a shared housing provider and you're providing housing to individuals and organizations that need it because they want to place their consumers in your property because they need affordable housing. And that's what it is. Affordable housing is not going anywhere. People are going to need affordable housing, safe affordable housing for individuals who are either high risk, individuals who are seniors that cannot live on their own, or individuals who are vets that have a fixed income. They collect SSI while they're waiting to get into some of these affordable housing apartments and whatnot that have these crazy waiting lists. They need somewhere to go. So if you are turning a property or you're looking to invest in a property, you need to actually entertain starting a shared housing program, because that program, right, that I run can easily eradicate the holding costs for real estate investment property. So now you've held this property for a year and a half. Let's say the property goes up with you making upgrades. You've made maybe 30%. The property value goes up maybe $25,000 plus some other properties sell in the area because you anticipated what was going to happen. So now you've done this. You put the property back on the market. You have 2 people in there who are renting from you. You have access to your property all the time. So what do? Those people are living there. You're looking for your next property, and while those other individuals are in that property, the real estate agents and people are coming in, showing your property. They're calling you, scheduling times to come and look at the property because it's on the market. So now you sell that property. So not only do you make a profit, you have not spent any money out your pocket really at all to hold that property while you, number one, flip it and make the upgrades you need, or number 2, wait for the property to gain equity, and then you can sell it down the line. Either way, you're looking to move the property and sell it down the line, and either way, you're winning because you didn't pay anything out of your pocket to actually hold the property. And on top of that, the money that you put down on the property, you damn near recoup that. So because you know that you damn near recoup that because of the cash on cash return. If you put down 40 grand on a property or 20 grand on a property, and now that this property is paying you $2,500, $2,600, $2,400 a month, and your mortgage and your mortgage is $1,000. That's $1,400. Let's say you're profiting probably $1,000 right then and there. So you're going to see your money, a large portion of your money back, right? And then you'll see the rest of it and then some once you turn around and sell the property and all the upgrades have been made. The key is having access to the property to make those upgrades, right? At the same time, the property paying for itself, at the same time you maximizing the amount of money that you can recoup from the property by running a shared housing program, by being a shared housing provider. Okay? So that's a topic I want to touch on today. This segment's called the Daily Grain. Okay? So this is Against the Grain Real Estate TV. I'm your host, Richard Chinakwe, and thank you for tuning in. You guys can follow me on Instagram at Rich for Wealth. You can follow me at Twitter at Rich for Wealth. And I'm going to be doing these videos every single day. I got some topics I want to talk about because this niche in this industry is not really heard of. People don't really know about it. A lot of people don't really know. I mean, some people call it room and board. Some people call it boarding housing. Some people call it different things. But being a shared housing provider and setting the standard in the industry will make sure that you will always have consumers. I have a 16-person waiting list right now. That means I have 16 people waiting to hand me $800 a month because I've started this program 10 years ago. I've been doing this 10 years, so there's nothing I have not seen. So if you're interested in investing in real estate, I'm going to show you a practical way that I use to invest in real estate, and that's pretty much it. So thank you for following me. There'll be another video tomorrow. Okay, thank you. Thanks for tuning in. This is Against the Grain Real Estate TV. This is where we will our revenue from our investment properties and we don't wait for it. Thanks.